Hello, traders, investors, and cryptocurrency fans. Welcome to our channel where we bring you in-depth analysis, breaking news, and reliable projections about the Web3 blockchain universe and digital money trends. Today, we will talk about a surprising development in the corporate and crypto world when Classover Holdings, an educational technology company listed on the Nasdaq, has announced ambitious plans to raise up to $500 million through convertible bonds issued to Solana Growth Ventures. Part of this capital will be used to buy SOL tokens, the native currency of the Solana network, in a move similar to the strategy adopted by Strategy Inc., formerly MicroStrategy, which transformed its cash into Bitcoin. In this video, we will explore why an education company is buying SOL, how this financing will work, what are the risks and opportunities of this bet, and if you should consider this new narrative of blockchain corporate treasuries. If you want to understand why even companies outside the financial sector are looking at cryptocurrencies as a strategic reserve, keep watching until the end. An education company is betting on the future of Web3. You may be wondering, what is an education company doing buying cryptocurrencies? The answer comes from Classover Holdings, Nasdaq Kidsy, an online education startup that decided to change its financial strategy after facing recent difficulties in the traditional market. It has just announced a major agreement with Solana Growth Ventures, the innovation arm of the Solana network, to raise up to $500 million in collateralized convertible bonds. In addition, it had previously taken out a $400 million loan with the same objective, to increase its exposure to the Solana ecosystem, especially the SOL token, with potential for future appreciation. How does this agreement work? Classover's financing is based on senior secured convertible notes, a type of debt instrument used by companies seeking quick but flexible capital. According to the statement, the notes can be converted into company shares in the future. This will only happen if the share price reaches 200% of the value recorded before the agreement, that is rising from $2.66 to $5.32. In the meantime, Classover has committed to using up to 80% of the proceeds to purchase SOL, which means that $400 million in Solana network tokens should enter its treasury in the coming months. This move shows how blockchain tokens are entering the corporate radar, not only as digital currency, but also as a strategic reserve and hedge against inflation. Classover already has a position in SOL. Even before this big announcement, Classover had already taken its first steps in the crypto market. It bought 6,472 AIM SOL tokens for around $105 million, and now plans to expand its position, looking for discounted buying opportunities. This strategy is inspired by the Strategy Inc. model, which transformed its balance sheet by buying more than 580,000 bitcoins and now has a market cap of over $100 billion. Experts note that smaller companies are starting to follow this same logic, but betting on promising altcoins like SOL with technical and fundamental potential. Why is SOL an interesting target for corporate reserves? SOL has been gaining traction among institutional investors thanks to high transaction speed and low fees, growth of the DeFi and NFT ecosystem on the network, strong support from developers and major players in the crypto sector, new tools such as integrated AI, decentralized staking, and greater liquidity. And Classover seems to have seen this early With this new influx of capital, the company hopes to strengthen its financial position and innovate within the education sector using blockchain technology. In addition, it intends to integrate tokens and smart contracts into digital education platforms, something that could pave the way for loyalty programs, tokenized certifications, and decentralized learning systems. Market reaction to the news. The announcement had an immediate impact on the market. Crossover shares rose almost 40% on the Nasdaq shortly after the deal was revealed. Although there was a slight correction in the aftermarket, the movement showed how investors are interested in any project linked to the growth of the crypto ecosystem. However, despite this momentary jump, the stock is still down 48% in the last 30 days and 7% in the whole year, which indicates that the market is still divided on the effectiveness of this strategy. Even so, analysts see in this movement a new narrative in the making: blockchain tokens as corporate reserves. Other companies are following the same path. Crossover isn't alone in this bet. In recent months, other companies have announced similar plans. SOL Strategies, betting on Solana network infrastructure. DeFi Development Corp, integrating decentralized finance into operations. Apexi and Janova, both exploring the use of tokens as reserves. These companies are spread across different sectors, but they share the same vision. Cryptocurrencies can be more than speculation. They can be real protection against monetary instability. Crossover Holdings is betting big on the future of Web3 and is putting $400 million into SOL as a central part of that strategy. If successful, it could serve as an example for other companies looking to innovate in finance, technology, and stores of value. But there are clear risks. Volatility in the crypto market, reliance on a single digital asset, reaction from regulators, and the traditional financial market itself. Therefore, the success of this strategy depends on time, the maturity of the sector, and Solana's ability to maintain its role as a competitive platform in the face of Ethereum and Bitcoin. If this video helped you better understand this new phase of the crypto market, like, share, and subscribe to the channel, activating the bell to receive notifications whenever we release content about cryptocurrencies, market analysis, and global trends in the sector. Leave your comment. Do you believe that more companies will start buying SOL, or would you prefer to see more regulatory clarity first? Until the next video, and remember to invest wisely, always learn and protect your assets.